Hello and welcome to AI Market News by LM.
It's great to be with you. We've got a really fascinating week to unpack for the markets, so let's just dive right in.
So November was, well, an absolutely stellar month for stocks, one of the best of the year, really. But now that we're in December, it feels like the markets hit a brick wall. All that bullish momentum is suddenly clashing with some pretty serious macroeconomic uncertainty. It really leaves us all wondering, okay, what happens next?
Okay, so here's how we're going to break it all down. First, we'll see where the markets are right now. Then we'll get into the big central bank divide that's causing all the drama. We'll also check in on market sentiment, see how key assets are moving, and wrap up with a look at the week ahead. Let's get to it.
All right, first up, markets at a crossroads. November was just on fire. U.S. equities had a fantastic run, powered by those classic seasonal tailwinds we often see at the end of the year, plus some solid technicals. But then, boom, the calendar flips to December 1st, and it's like a switch was flipped. The whole mood just soured, and caution is suddenly the name of the game.
And you can see that shift crystal clear right here. I mean, look at that. The S&P 500 had that great rally, but then NASDAQ and Dow futures kicked off December pointing down. So what gives? What's causing this sudden hesitation? Well, the answer really comes down to what the world's biggest central banks are doing, or more accurately, what they're saying.
And that brings us to the real heart of the matter this week, this growing divide between central banks. We're seeing two totally different stories play out between the Bank of Japan and the US Fed, and it's causing some major waves.
This really paints the picture, doesn't it? It's like two completely different game plans. Over in Japan, the Bank of Japan is suddenly sounding really hawkish. What does that mean? Well, they're hinting at raising interest rates, and that's giving the yen a major boost. Meanwhile, back in the US, the vibe from the Fed is much more dovish. The chatter is all about potential rate cuts down the line, and that could really put the squeeze on the dollar. It's a total tug-of-war.
And this isn't just talk. According to various news commentary, the Bank of Japan's Governor Ueda dropped his biggest hint yet. He's talking about a potential rate hike at their meeting on December 18th or 19th. The market reaction has been huge. I mean, traders have gone from thinking it was a long shot to now pricing in an over 80% probability of a hike this month. That's a massive shift in a very short time.
And here's what that looks like in the real world. This is the USD/JPY chart, and you can see the effect of that hawkish talk immediately. The pair is moving down, which means the yen is getting a lot stronger against the dollar. It's now pushing towards that 155 level, all because traders are scrambling to react to this potential policy shift.
Now, compare that clarity from Japan to what we're getting from the US side. It's night and day. We get this quote from President Trump, "I know who I am going to pick for the next Fed chair." It's pretty vague, right? All the whispers suggest it's going to be a dovish pick, someone who likes lower rates. But that uncertainty, it's creating this massive cross-current against the BOJ's very clear message, and markets hate uncertainty.
Okay, so we've got these two giants, the BOJ and the Fed, pulling the market in opposite directions. So, how is everyone feeling about this? How are investors reacting on an emotional level? Well, to figure that out, let's take a look at a really handy tool, the Fear and Greed Index.
Now, if you're not familiar with it, the Fear and Greed Index is a brilliant piece of work. It essentially pulls together 7 different indicators to give us a single number that measures the emotional pulse of the market. The whole idea is that extreme fear can be a buying signal, and extreme greed can be a warning sign. It's basically a thermometer for market sentiment.
So how does it work? Let's just touch on 3 of the big ones. First, it watches volatility, the VIX. If the VIX is jumping, that means fear is rising. Simple. Second, it looks at the options market. If a ton of bearish put options are being bought compared to bullish call options, that's a pretty clear sign of nervousness. And third, it checks for a flight to safety. Are investors dumping stocks and piling into safer assets like bonds? If bonds are outperforming stocks, that tells us fear's in the driver's seat.
All right, so we've got the central bank battle and this shifting sentiment. So what does this all mean for our portfolios? How is this actually playing out in the markets? Let's take a look at some of the key moves this week.
And wow, it is a real mixed bag out there. No surprise, the S&P 500 and NASDAQ are down, reflecting that cautious start to December we talked about. And the USD-JPY pair is also down, with the yen getting stronger, just as we'd expect from the BOJ news. But here's where it gets interesting. Look at silver. It's rallying, getting close to record highs. That's a classic safe haven move. And then there's Bitcoin, which has taken a serious tumble, falling well below the $37,000 mark. It's definitely a chaotic picture. So with things so finely balanced, what could tip the scales? As always, it comes down to the data. Let's look at the key economic events on the calendar for the coming week.
Okay, pulling up the high-impact calendar from investing.com, we've got a few big ones circled for the US this week. On Monday, December 1st, we're watching the ISM Manufacturing PMI. That's a key snapshot of the factory sector's health. And on the same day, Fed Chair Powell is speaking. Markets will be hanging on his every word. But the main event is Friday, December 5th. That's when we get the US PCE inflation data. It's the Fed's preferred measure of inflation, so yeah, that one could really shake things up.
And that really brings us back to the central question, doesn't it? It's a classic standoff. On one side, we have the bullish seasonality that usually gives markets a nice year-end boost. But on the other side, we have this massive cloud of macroeconomic uncertainty, mostly thanks to these dueling central banks. So, which one is going to win? That's the million-dollar question for this week.
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.